All right, guys. And I say that affectionately, it's men and women. John Carter is someone I've been watching his videos for years. And it's always been intriguing. I've always been like, I want to meet this guy. I got to talk to this guy. And I put someone in my team in charge of getting in touch with him. And there was no dice. We had trouble reaching him, you know. He only cares about his customers. So he was hard to reach from an outside perspective because I wasn't a member, I guess. So one day we were at this event in Orlando, and I saw him at the bar, and we went over like, John! He had no idea who it was. I felt like a stalker. I was like, I'm trying to get in touch with you for a year. But, you know, there's a limited number of people that do what we do on the level we do it. And John's been a very big name in the industry. Everyone knows who he is. And I really wanted to introduce him to our audience. It was something I was excited about. I know you all love options, and he's one of the biggest names in options trading there is. So this is a long time in the making. John's a superstar in the options world, and I think you all are going to learn a lot, and I'm excited. I'm going to stay on. I want to hear what he has to say, and it's just our goal to provide you with winning ideas. That's one of our commitments to you. I told you last year we're going to have a renewed focus on exposing you to the best ideas all year round. So I really hope you enjoy this. Totally let me know what you think. Thank you all for showing up. And with that, I'm going to chat John that the floor is his.
Okay, fantastic. Thank you, Adam. Let me grab the screen here, and we will dive right in. So what I talk about here specifically, it's a blueprint. Everybody has different goals trading, right? And you know, so I always find that people either look, I've got a retirement and I want to make 20%, you know, or I'm in a situation where I've got a smaller account and I want to grow it, but it can be risky, like doing pure directional trades. And what I found here is it's a pretty methodical way to generate 120% a year. Could it be more than that? Of course, it's all dependent on position sizing. But more importantly, I just want to show you the philosophy behind it, and I find that it's very helpful. So real quick, for those of you that don't know who I am, you know, it's like, I think it's always a fair question to ask, like, well, who are you? So me, I grew up in a military family, but I never joined the military myself. This was my great-grandfather, Grandpa Good. He was in World War I, grandfather, World War II, and then my dad was in Vietnam. So I kind of grew up with that discipline and then eventually learned trading from my stepfather, Lance. He was a broker with Morgan Stanley. And in 2005, I wrote a book called Mastering the Trade and then redid it in 2012. And this focuses more on futures. And it was just kind of my journey into trading. Pre-kids, I would go around the world and speak at conferences. This was in the Czech Republic where somebody gave me a beer, which I thought was pretty awesome. I've done CNBC and all that. And then at some point I started having these things called children, which kind of, I just stopped doing that. I've been able to work with some of my heroes. This is with Richard Branson on Necker Island, right there as well. And we work on some different initiatives together, which is a lot of fun. And again, my main thing today, I've got 3 kids. They're at that age, 7, 9, and 11, where I don't want to be traveling all the time and away from them. So I kind of stick to home or just take them with me. I like to do some mission and charity work, but at the end of the day, I'm a trader. I like to trade, and that's what I want to do. And this is kind of my setup here. I like to, you know, have my different monitors where I'm looking at intraday stuff and swing stuff, and it's important to have good energy with some crystals and things like that too. And what happens is every year I kind of like to start off with about $100,000, and then see, you know, can I run it up to 7 figures? And a lot of times people say, well, that's impossible. You can't do that. Why don't hedge funds do it? Well, hedge funds can't do it because the liquidity is not there. If you got $100 million, it's really hard to try to run it up to $1 billion because the liquidity is not there. As retail traders, we have a unique niche in the markets in that we can do things that hedge funds cannot do. Okay, and because of that, there's a lot of cool things that we can do because we have the liquidity. So curious. So is anybody here? Just out of curiosity. Has anybody here been trading options for like less than a year? I just want to get an idea of like beginners or intermediate or advanced or anything like that. Okay, no, and that's fine. In general, I'm not a huge fan of what I would call complicated option strategies. So complicated to me is calendars. They're not that complicated, but butterflies, calendars, iron condors. Those to me are kind of complicated, kind of a pain. So I try to, I don't do those very much. I stick to, I'm either, if I think a stock is going to go up, I either one, just buy a call. Two, I'll do a call debit spread, which means, you know, you buy a $60 call, which is in the money, and then sell like the $70 call that's out of the money with the idea that that's going to expire worthless anyway. Okay, so you cap your potential reward, but you also reduce your risk. And then three, you know, a put credit spread. And I typically do at the money. And that's for bullish positions. And then for bearish, it's obviously the opposite. Buy a put debit spread or a call credit spread. That's all I do. That's pretty much it. So I like to try to keep it pretty simple. So what I've found over the years, and I've tried, like most traders, you go through a period where you try everything. You know, you're looking for the holy grail, you're looking for the best indicators, you're spending hours a day looking at charts, you're spending hours a day looking at the news. And what I came to the conclusion was that all that's a waste of time. Your only goal and your only mission as a trader is that your equity curve should go from the lower left of the screen to the upper right, and that's it. And the beautiful thing about this is that once you understand that and once you get this mindset, this becomes a lot easier. I don't watch CNBC. I don't look at the news. I don't need to have the latest and greatest up-to-date information on anything, simply because all I'm worried about is my equity curve. That's all and I have specific setups that I like, and that's it. So it makes this a lot easier, a lot less complicated. So the question here is, what is realistic? So in my experience, if you have the right mindset and the right setups, you can set up a realistic trading plan that generates an average of 2.5% return on equity per week. Okay. Now, for some of you, that might seem aggressive, and for others, it may seem boring. Okay. But keep in mind, when I say that you've got the framework for 2.5% a week, which by the way is 120% a year, you can increase that or decrease that based on your position size, okay? So at 2.5% a week, that is actually a very modest, a very conservative approach where you don't have to stress out too much. If you're willing to take more risk, you can, okay? So let's say that, okay, oh, that seems kind of boring, and let's say you only have $2,000 to start with, and 2.5% a week is like, that's not gonna change my life. But look what happens if you develop the skill set. Okay, most people's equity curve looks like this. They're up, they're down, they're up, they're down, they're up, they're down. And at the end of the year, for most people, they're down, or they just spend a lot of time, doing nothing. If you can develop a skill set and get 2.5% a week as a skill set, $10,000 turns into 22, and then 48, and then 106, and then 234, and then 515, and then $1 million. Okay. Now what I've done is I kind of shorten that where I can develop the skill set where I could go from $100,000 to $1 million in a year, okay, and I'll talk more about that. But for what I would say for people that are newer, you can get into a system where you can do this, okay, and it's not that complicated if you're focusing on the right things. So my goal is that while doing this over the course of 6 years is great, I do like to try to do that in less time. I think that if you're, the problem with this is that you can't have a goal to go 10x in 1 year. If you set that as a goal, you start taking too much risk. But if your goal, is to go 2x in 1 year, what happens is that you control your risk better. And if you control your risk better, then the upside can take care of itself. So my goal at the end of the year, or at the end of the day, is I want to create income and wealth creation. Okay, what does that mean? It means that I want to be able to extract cash from my trading account on a weekly basis to pay bills, okay? But I also want to grow my account, okay? So what I've done this year is I started off at $117,000. Once it got up to $400,000, then I wanted to start doing weekly income, okay? And you can see I was just showing you guys a screenshot of this. So, this is where, again, it shows P&L year to date, all that kind of stuff. And so what I started looking at then is you can see like, okay, here's my statement at the end of March. My balance was $278,000, And then here's my statement at the end of May. My balance is $655,000. So, I mean, this is really happening, right? And then what I do then is every week I track, like, all right, so here's my beginning account balance at the beginning of the week, and here it was at the end. All right, so what's 2.5% of $411,000 is $10,000, right? So I wire that out. And then the next week, my balance is $400,000. Now, this is a really good week. And this happens sometimes because you have some trades that really take off, but I'm still only wiring out 2.5% of my new balance. So now my capital really grows, and then it's at 628. Now here I had a down week, okay, and that's going to happen. So you can see this week I made 3%, then 37%, then 20%. Well, I lost 3%. Now I still wire out the money because that's my discipline part. Now I've got to make it up, and then the next week, anyway. So that's what I do, and then and you can see here, I just have the money wired out of TD Ameritrade into my bank account. And you can see, like, first here was $10,000, here was $13,000. And that's my goal as a trader. I don't care about if I'm right or not. I just want to make money. So the worst, and everybody's trading philosophy happens as a result of their experience. So this is my experience trading. So I started trading. My first trade is as a senior in high school, and then for the next 8 years through college. And as I worked as a financial analyst, I traded. And I got to a point where I had $150,000, and I was wiring out weekly money. I was trading pretty conservatively, but I was making about $4,000 a week. And then what I would do is I would put that money into rare coins. So I was a gold bug and, MS62 double eagles and stuff like that, stuff that really wasn't liquid and had a wide bid ask. So, and I was working full time, and I was on the verge of wanting to quit. And then I got a transfer, and my wife at the time, my fiance and I at the time were living in Austin, Texas, and we're actually thinking of doing something crazy like going to Korea and teaching English. And we're just like, okay, before we have kids, let's do something nuts. And about this time, my employer said, hey, we've got a promotion for you and a job opening in Minnesota. Do you want it? And we're like, Minnesota? And we took the, but, it was one of those things that's like, well, we looked on the map, and Korea and Minnesota are at the same, latitude. So we thought, well, okay. So we went up there, and it was January. Now, I had seen snow before because I spent some time growing up in Nebraska. My wife had never seen snow, and this is exactly what it looked like. So the short version is like, okay, here I had a $150,000 account. We moved to Minnesota. I'm going to work, and at some point I'm going to quit working because I had to build up confidence and just trade full time. So we got there, and my wife was like, hey, you know what? I love you and all, but my car doesn't work, and I'm trapped in this apartment all day. We need to get a house, okay? A house that has a heated garage, and it's got more room. I'm like, you're right. So we found a house, and it needed a $30K down payment. Now, I didn't have it because all my profits were going into rare coins, and you got to hold on to rare coins for like 5 years, or you're going to take a bath. So I was like, all right, well, where am I going to get the $30,000? I don't want to take it out of my trading account because then it would drop to 120,000, and then psychologically, I knew that would mess me up, trying to get back. So I had this really great idea and said, you know what, I think what I'm going to do is just do a couple of big trades, make the $30,000, then my trading account is going to go to 180. I wire the money out, buy the house, I'll still have 150, and then we're good to go. Okay, so that was my idea. So what happened was, and this was like in 1995, the market was in a downtrend, and we were rallying back up to that downtrend. And so I bought 100 OEX puts at 7. Okay, so I put half my account into the trade. The market immediately started dropping, and I was up like 10K. And then it went back up a little bit, and then I was able to buy some more. So I bought another 100 OEX puts like at 8. Okay, or maybe it was reversed. I think it was reversed. And by the time the market closed, I was up like 15K. So I was like, wow, all that's got to happen is the market drops a little bit in the morning. I'm going to make my 30 grand, and I'll be good to go. So what happened? So the next morning I wake up. The Dow futures are up 150 points, okay? And what happened that day is the market essentially broke through this trend line, and it gapped up, traded sideways, rallied into the close. The next day it gapped up, traded sideways, rallied into the close. The next day it gapped up, traded sideways, rallied into the close. I don't even remember this because I completely have blocked it from my mind. But what happened was at some point I needed to get money for the house payment because the close was happening like the next day. And so I called the broker, closed my positions, and my $150,000 account had dropped to $8,000. I destroyed my account. So I didn't have the money for the house. So I did what any husband in their right mind would do, which is I sure as hell did not tell my wife what I just did. I went to the bank, I maxed out all my credit cards, put the money in my account, and at closing, everything was going fine until they said, well, sir, you said that the money was going to come from your trading account, but we see that this is coming from your personal account. Where did these funds come from? I'm like, I'm screwed, because if they find out that I'm putting the down payment on a credit card, I'm not going to be able to get the house. My wife's going to think I'm a loser, yada, yada, yada. So I just kind of acted stupid, for the next hour, and finally they just, rolled their eyes and we closed. And that was, so that was horrible. And what happened is over the next, 6 months, I couldn't really trade and I was in shell shock. But I came across two things that helped. And one is 6 months later, I came across Mark Douglas's book, The Disciplined Trader. And that changed my life from a trading perspective. And then from there, I just started mentoring with traders. I'd sit at their desk for a week until I could build up a stake again. And, I started selling some of my rare coins to build up a trading stake again. And that was the foundation of how I trade the way I do today, because obviously I don't want that to happen again, because that, that really sucked. So our goals with this is what I want to show you real quick here is to learn a high probability account growth technique that you can use right away on both larger and smaller starter accounts. Fully understand how the markets really work, including when to ignore the expected move and look at what I call the actual statistics, the traits that income trades and account growth have in common, and understanding and taking advantage of biweekly options, which I found are the best hidden method of income generation, and occasional lower risk home run trades. So why consistency and not home runs? Home runs are great, don't get me wrong, but what we're looking for is consistency. Because in order to grow an account quickly and consistently, a trader must learn how to limit risk even in the face of an unexpected disaster, and understand and harness the power of compounded gains. Okay, so that's the key. And a lot of traders can look back on their trading history and point to consistency. Some of the time, it is the patches of inconsistency and the occasional position blow up that ultimately ruins their equity curves, right? So we want to eliminate that and just focus on consistency. And really at the end of the day, and I just got back from a 2-week trip in Africa, so I saw a lot of elephants there. In fact, I can show you, I think I've got a picture where I did a selfie with an elephant, which was pretty funny, if it's still on there. You never know with the Facebook algorithms. That's my youngest son, elephant, coming up to the car. This is my daughter. Oh gosh, where is it? Oh yeah, so we're sitting there, and that was an elephant came up, and I literally just it was pretty amazing. It was a great place. Highly recommend Africa if you ever get a chance to go. But the idea here is that in trading, you don't want to get in the habit of taking small gains, okay, and then having large losses. That's called eating like a bird and defecating like an elephant. Okay, that's unsustainable. So a large part of consistency, yeah, there are some home runs once in a while. A large part of consistency is understanding the rules of consistency and understanding how to finance risk. So what do we know? Options, especially weekly stock options, are rigged with explosive gamma, a trait that makes market makers pounce upon this by design, and they pocket this money by essentially taking it right out of your account. Okay, so that's not good. And then, we also want to understand the whole concept of time decay. As you guys are probably familiar, is that, when you buy an option 120 days out, you don't lose that much premium. But when you're dealing with weekly options, if you're on the wrong side of it, okay, you can get destroyed very, very quickly, which is not good. Okay, and so most traders, from that perspective, they do get this. They do get this completely wrong. Okay. So what I want to look at here is, look some examples of some trades here that I like to do. So this is kind of like how I like to set up these trades where, you'll notice here, and if you're newer, don't worry if you don't know what this means, but I call it theta positive. So I'm buying, in this case, you can see that in the video it's $152. So I'm buying an in-the-money call, but then I'm also selling an at-the-money put credit spread, okay? And so what happens is, and I do this ratio, or in this case, I got 10 calls here. I sold 30 of the put credit spreads. I'm theta positive, which means that, because remember, we want that equity curve to go up. And now what means, now look, sometimes you're going to be wrong, right? And if we're wrong, we're wrong. But what's worse is when a market's going sideways, okay? So if a market's going sideways and you just have a long call, you're going to lose money. But if the market's going sideways and you've got a put credit spread, you're still going to make money. It's going to offset that, okay? And you're still going to be fine, and that helps your equity curve. So then the question is, well, why not just do the put credit spread? Well, if you just do the put credit spread, that's high probability, low reward. So I love put credit spreads, but you're not going to get that pop that you want to see in your account, right? So here, while this option has doubled, okay, you can see, like, so I've made $4 almost on this option. On this option, I've made about 70 cents, and so give or take. And so I like to do a combination of both if, okay, the setup is correct. Now, sometimes things will explode, all right? And this was one on Google, and this was a fantastic one where we loaded up on it because we got a good signal, and we're trying to just do that one quickly and get out and book that money, and then we continue to generate income from that put spread, okay? And so you just can, you know, obviously go through and set things up that way. So just a few more examples there. So let's look at, you know, what I want to talk about here is just the idea, and we've kind of done this, is that if you guys are familiar with what I call expected moves, okay, so the expected move is what's priced in theoretically. So if you look here at Apple, and if you guys are familiar with Thinkorswim, it says here that the expected move is $3.45, right? Well, if you look at this, okay, that's the expected move, and that's what the market makers have priced in. But if you look at the actual stats of what the stock tends to do, it's a lot different. So you can see that while the market makers are pricing the options for a $3.45 move to the upside or a $3.45 move to the downside, in actuality, what the market is telling us is that the downside really is only $2.55, while the potential upside is $4.22. This is really, really important because what happens is a lot of times income traders come in and say, well, I'll sell a 1 standard deviation iron condor, and it doesn't work because they don't understand that statistically the call side of this option is not going to work on Apple. So this gives you the actual parameters, and then based on that, you're able to set up an income trade that's much, much more accurate, okay, and works at a higher percentage of the time. So those are some of the tools that we want to look at. The other thing with this is that when I talk about biweekly options, is that I do not like to sell. Now, look, I'm a big fan of weekly options. Like today's Wednesday, right? If I'm selling weekly options, I am not selling options that expire this week. I'm not selling options that have 2 days left of life. And you might be asking, well, gosh, John, that's dumb because the last 2 days are when you have the fastest premium decay, and that's when you can make money the fastest. You're right, but you also have to nail the direction, okay? And the other thing is that all the theoretical stuff that the market makers are doing is BS. The pricing is incorrect. So you're basing option trades off of flawed models that don't work. And like we just showed you, that the expected moves that they're calculating completely differ from actuality, okay, from what actually statistically happens. And so what I like to do is that if it is, I always just sell the next week. Okay, so today, you know, we were doing some of these options, but, you know, we're doing them for next week. We're not trying to screw around with anything that's happening this week. So if you look at like this Amazon trade that we did today, you know, I'm not trying to be cute and get this for next week. Or this week, I'm doing it for next week. We also did a trade today in Google. Okay, and I'm not trying to do this for this week in 2 days. I'm doing it for next week. So that's really, really important, again, if you want to put the odds in your favor. So the question here is, you know, gosh, this sounds complicated. You know, is this complicated? And this is something that I actually have explained to my mother before. She still hasn't placed a trade yet, but she's interested in it. And so what I would just say here is that the good news is, I saw a couple people here that's like, hey, you know what, I'm a little newer to this, which is totally fine. The good news is you don't need to know anything about options to do the strategy. Look, if you know the Greeks, that's great. If you don't know the Greeks, the gammas, the thetas, and all that, that's fine. You don't need to know that stuff. So this strategy is great for newer traders that don't want to get overwhelmed by that. And I've been trading options a long time, but I find a lot of options books confusing because, the author will dive into all the esoterics of, well, when the gamma spikes up and you got to do this. I'm like, that's just a way. I mean, that's just minutia. What are simple strategies that we can use just to grow our account, right? So the option strategies are safe. There's no naked selling, no random assignment of stock, all that kind of stuff. I can walk you through everything there. So, let's look at some trading truths here. And this is something that I found out the hard way. In trading, we do not get what we want. We get what we are, okay? We get our makeup. We get what we're focused on. And if we're inadvertently focused on the wrong things, we're going to be doing the wrong trades. We're going to be managing in the wrong way. So if you're fearful, you're going to take actions that create consistent losses, okay? And again, this is all stuff I learned the hard way. I thought if I was fearful, I would take less risk. What happened if I was fearful, I would take little profits and huge losses, okay? It doesn't work. If you are overconfident, okay, if you're overconfident, you will take actions that ignore risk and create huge losses, which is worse. So the bottom line is, if you don't have the right mindset, you're dead, okay? And trading is tricky because we can do it from the comfort of our own home or office, familiar surroundings, and this lulls us into the belief that we don't need specialized skills to trade, which is nothing could be further from the truth. That we just need to learn more about technical analysis, okay, which isn't the answer either. So, and I love this, to whatever degree you have not accepted the risk is the same degree to which you will avoid the risk. Trying to avoid something that is unavoidable will have disastrous effects on your ability to trade successfully, okay? And I love this quote here because it's just so random. When I'm in a slump, I can comfort myself by saying that I believe in dinosaurs. Then somewhere they must be believing in me. And if they believe in me, then I can believe in me, then I can bust out. So, hey, if it worked for him, I think it can work for anybody. So what I want to do is I want to show you, I've put together a class for this to teach you how to do this and to give you some resources. So if you go to simplertrading.com/weekly, okay, that's going to take you to a page and it will look like this. And it just kind of gives you the blueprint of this. I'll show you the exact trades that I've got on right now. These are all trades based on this class. Today, solid day today, obviously. I'm trying to get close to my goal of making $1 million. But all these trades are based on that, okay? And so it's not difficult to do. It's just that it took me 25 years to figure out how to do this. And so that's what I want to share with you in this class. And so if you simplertrading.com/weekly, what's going to happen is it's a weekly wires class, okay? So this weekly wire strategy class is it's about a 4.5 hour class online that shows you exactly what to do, okay? If you're newer, it's fine. It's not complicated. We did this class about 3 weeks ago. Got a lot of comments like, John, this is one of the better classes you've ever done. It includes the indicator that I told you about, the statistical indicator that will change your trading. We talk about the premium boost formula, and then it's also going to include a day of live trading. So after you do the class, we're going to have a day of live trading together. Okay, so what you're going to get in the recording, and again, it's a strategy class. And there's 3 days of live recorded trading we've already done using these strategies, okay? That shows you exactly what we looked for, exactly what we did. You can look at that. Plus, we're going to actually spend half a day trading live together. And that's where we can, the analogy I have of this is that, if you're learning to play golf, you could read 10 books on the weekend on how to play golf. And you're going to walk up to the golf course, you're going to have more knowledge than almost anybody on how to play golf. But when you get up there to actually swing the club, it's going to be a disaster because you actually haven't practiced swinging the club. And so trading is also a mechanical sport where you can't just read theory. You've actually got to understand, you you got to understand what your brain is supposed to look like when you're in a trade. It's easy to point at a PowerPoint in hindsight and say, this is where you should have got in and this is where you should have got out. But in reality, it's not that simple. So how do you do that and what do you do? And that's why we do the live trading together. So this also includes our gold membership, a 6-month membership to our gold membership. And guess what? Part of what I do here, and today I sent out 8 alerts, is that you get text alerts right to your phone when we're doing a trade. So what's nice about this is that you can understand the strategy, and that's great, but if you're busy and you're working full-time and you don't have time to necessarily do all this stuff, it's like, oh, wow, John's doing a debit spread on Google, and just go on your phone, and you can just do that real quick, and that's great too. So we've got, and if you are full-time, you can log into our chat room, you can see the charts that we're using, or, you can just, sometimes people just go in for an hour in the morning. So there's the chat room, which is a great community, over 1,000 traders in there. It's a really good room. We're live charts, live trade alerts. We do a premium daily newsletter that recaps the day and hands out all what we're planning on doing the next day. We've got a trading forum where you can post your questions. And then we've got a mobile app, which is pretty awesome. So it's good there. I think. So again, this includes the 2-week statistical indicator, the weekly price statistical indicator, and 6 months of the gold, plus the entire course. So at this point, it's $1,747. What we found was that the first week that we did the class, we actually made back the amount of that money in the first week. So to me, it's a very worthwhile investment. I'm happy to answer questions and things like that too, but I've been super excited. This is something that, again, has taken 25 years to put together. The people that have used it have just been like, okay, this is pretty much the best thing that I've learned. It's simple. It shows specific strategies where, like, the worst thing that you can do, I found, you'll learn strategies where it's like, okay, all you got to do is sell 2 standard deviation put credit spreads. And guess what? You make money 94% of the time, but the 6% of the time you don't make money, you give it all back. That's not what we're talking about here. So, it's specific. Which deltas are you selling? Which ones are you buying? Exactly what setup you're looking for. How do you do the statistical indicator? How many positions you should use? How do you calculate position size? How do you calculate targets? So all that stuff there is included. So it's pretty awesome that way. So let me see if let's see if you guys have any questions. Again, all you got to do is just go to simplertrading.com/weekly. This offer is good until the end of the day on Friday. And again, this includes the entire class on how to do this exactly. It includes 3 days of already recorded trading that you can watch. It includes 2 indicators that can help you do this. And it includes 6 months membership to our gold plan, where we're telling you all the trades that we're doing. So to me, it's probably the best investment in your trading education that you can get in terms of moving towards consistency. All right. So Sue, it's been fun to do it too, and today was awesome. Looking forward to more great trades this week. All right, let me see what other questions. Let's see what questions you guys have. My losing trades feels like an elephant pooped on me. Losing money trading is frustrating, and yes, it's going to happen sometimes. But again, at the end of the day, you can really tell if you're trading the right way based on your equity curve. And if your equity curve is not going from the lower left of your screen to the upper right, there's just things that you're not doing correctly, and a lot of times you may not even know what it is. And that's kind of the point of this class, is it really addresses and tweaks, like, look, if your main goal is to make money, then these are the things that are important, whereas over here, these things are not important in any way, shape, or form, and it gets you focused on the right things, which is great. Can this method be used in a non-margin account? Yes. So, we're not selling any naked options. I do know, and it depends on your broker, I do know, like, one thing people ask me, like, can I do this in an IRA account? And of course, you always want a position size small and appropriately in an IRA account, but some brokers will let you do it, like Thinkorswim, I know, lets you do it. I believe, like, Tastyworks will let you do it. Some brokers may not, so it may be some, in some cases you might, like, you may need to, like, say, switch brokers or something. Let me see what other questions you guys have. I'm new to options. Where can I start? So James, this class does actually include a beginner option class as well. So if this, if you're excited about this idea, which I hope you are because it's pretty awesome, it gets you all teed up and ready to go. So you'll kind of get all the tools, and this is kind of the stuff that, man, if I knew this back when I was in Minnesota and I was doing those crazy trades to try to make $30,000 for a house, I would have had a much better experience, and I would not have had to go through all that pain and suffering, which was horrible, had I known this then. But I guess, sometimes it does take going through 25 years of kind of toil to learn and refine those techniques. And so that's why I'm kind of happy to share it as well. It's like, hey, look, this is something where if other people don't need to go through that, then that's a win. What do you do when a trade is up and you send a sell with the influx of sells drive the price down quickly? So Brad, when we're getting out, we're actually getting out at limit orders. So what we don't do is that we don't say, okay, here's a sell order, and all of a sudden a flood of market orders hit the market, right? So we have limit orders in place that are good till cancel. And by the way, I don't know if you guys know this, if you do good till cancel orders, retail traders are in line in front of the institutions. So we place those orders right away, and we sit on them sometimes for days, sometimes for weeks at a time, so that if and when price does get there, we're the first ones out. Is a $5,000 account decent to start with? So we have a couple of people that are doing $5,000 and sub $5,000 accounts for sure. So anywhere from, in our trading room, we've got, I know a couple of people that are doing a couple $1,000 accounts. Some people in there are doing 7-figure accounts. And so, they like for all of them there. I'm just starting. What's the smallest you can start with? So I do know, for Tastyworks, if you are, let's see, www.simplertrading.com/. If you want a broker that allows for smaller accounts, if you go to this link right here, simplertrading.com/Tastyworks, if you're not using a Tastyworks account, you can open up an account with $2,000 there, and they're pretty lenient in terms of the different things that you can do. Can the coursework be tackled at your own pace? Yes. So great question. So once you sign up, you'll get access to it, and you can pause it, anything like that. So I encourage you to go through and take notes. If you can get through the course before our live trading session together, it's a plus because you'll be able to ask questions. But of course, you'd be able to ask us questions anytime as well. Can I use this trade through, Fidelity? So, one thing, Doug, that I found is that sometimes, people that have, like, say they're with Fidelity and they really like their broker, that's great. What you can do is, like, say, open up a Thinkorswim account with like $2,000 and, use the tools and then still do your trades there on Fidelity. That's one way around it. Yeah, and if you guys want a Thinkorswim account, if you go to simplertrading.com/toss, we do have discounted rates set up with them. So if you're interested in that, or you can just, you can just email them too and say, hey, we're with Simpler Options. Can I get their rate? Yeah, Options House is also very reasonable. They've got good rates and things like that too. Let's see. Yep, IRA-friendly trades for sure. Yeah, no, there's no naked trades or anything like that. Let's see. The Apple was based on wrong assumptions. I'm not sure. So that Apple was from 4 weeks ago. So that was the expected move 4 weeks ago. Oh, you already have Tastyworks. Perfect. Yeah, Victor. So which platform do you have? We do actually have some for some of the other platforms. It just, a lot of times it depends how friendly the platform is to integrating custom indicators. Huh, okay. And I know at some point we are going to have our indicators ported over to Tastyworks. Right now, they're just, they're still continuing to build out their platform. So it'll be a few months before we can get to that. So, yeah. So anyway, hopefully you guys, what I found in talking to people about this is that, if you're interested in the idea, this is very, very powerful. We recently had a live event, and I've never been to an event like that where so many people came up and just said, because I don't realize what we're doing, right? I just like, hey, we're trading. But people are coming up and giving us hugs. It's like, you're really changing our life in terms of what we can do and our expectations. And I'm like, that's awesome. I didn't know it was that powerful. I trade all the time, so I'm used to, it's like the fluctuations and stuff like that too. And I forget how frustrating this can be when you're first starting. So this is just a way to kind of get on track and do all that kind of stuff. So anyway, that's all I wanted to share with you guys. And if you take advantage of this and you get on the gold plan, I'll see you in our trading room tomorrow. Obviously, you look forward to going through the class. I'm anticipating a pretty active day tomorrow as well. Today was very active. This week has been fantastic so far. And by the way, people always ask, well, what if the market goes down? I love down markets. Bear markets are great. We're, obviously seeing some buying right now, so we just kind of go back and forth, but the signals are irrespective of bull market or bear market. So in the class, I go through and say, look, if these criteria are happening, you're going to do these bullish plays, and if these criteria are happening, you're going to do these bearish plays. Like, I don't care if the markets are going up or down, but you've got to understand if the odds are that it's going to go higher, or if the odds are that it's going to go lower, so you're not caught, off guard, which is always a plus, right? Which probability calculators as part of the analysis? Oh, well, the statistical indicators. Okay, and then it's also Mike shows it with you too. So in TOS, okay, here I can show you real quick. So if you're looking at, and if for those of you, and if you're a newer trader, this may not make sense, but if you are been trading for a while, this will make sense. So here's what I've found, is that weekly options numbers are hogwash for the most part. So here's a trade we have on Facebook. So right now you're seeing like, wow, for next week, the expected move is $4.40, right? Well, what'll happen is, statistically speaking, if you look at that and you use these tools, it's kind of like, well, is that really accurate? And you'll see on here, it's like, well, for the upside, this is actually showing, a much bigger probability move, okay? Like closer to $5 to the upside, whereas the market makers are pricing in a $4 move, and the actuality is more like $5.40. So if you're selling premium based on this expected move, you're going to get hosed, because essentially you're going to be selling premium that's going to get run over. Like, you're going to have to defend it, and if you don't know how to defend it, you're going to get slammed. So in those cases, what happens is, someone says like, oh, I'm going to sell, one standard deviation call credit spread for income. You're risking 10 to make 1, and you get run over by a freight train unwittingly. So the statistical indicator will show you, it's like the odds are what actually is likely to happen based on statistics, not Greeks that don't work on such a short time frame. And so it helps you kind of plan those out a lot better. All right. Oh, thanks, Victor. No, appreciate it. Yeah, it's Mastering the Trade. We're actually finally starting to work on the 3rd edition. So we'll have that update hopefully by the end of the year. Okay. All right, guys. So again, the link for this class is simplertrading.com/weekly. And again, just keep in mind, this includes a class, okay, the class that teaches everything, a recording of 3 days of live trading, okay, so you can see how it works. And then it does include actual live trading, so that'll be on the 20th of July, so we trade together. It includes 2 indicators, okay, and it includes 6 months of our gold plan, which gives you access to our live alerts and room and stuff like that too. So it's a really good deal. It's a really good package. And if you're just starting out and you're like, okay, I just want to learn options, this is great. If you've been doing this for a while and you're a little frustrated with your results, this is great. I think you're really going to appreciate kind of the nuances and the simplicity of this approach. All right? All right, guys. Well, thanks for joining us. You guys have a good one. We'll leave the page up here for a little bit. For those of you that if you're joining tonight, and this offer is good until Friday, but if you are joining tonight, you can get signed up into our gold plan, and you'll start actually getting text alerts tomorrow, and you can see like, you know, which trades we're doing and stuff like that too. All right. All right, guys. Thanks, Adam, for having me. You guys have a good one, and see you on the other side.